Hello students, let me check whether my audio is, am I audible or not? Yes. Okay, just 2 seconds, we start. Okay, fine. Hello students, welcome to this CA Foundation Accounting Company Accounts Revision class. See, our class is from 8 to 10 p.m. 2 hours. In these 2 hours, what we are going to discuss is issue, reissue, sorry, issue, forfeiture and reissue of shares, issue, forfeiture and reissue of shares, bonus and right issue, redemption of preference shares. These concepts we are going to discuss now. These three chapters contains we get for 15 marks. Out of these three chapters, we get 15 marks. Okay, tomorrow, that is 17th morning session, that may be 10 to 12 or 11 to 1. We discuss the remaining two chapters in the company accounts. They are issue of debentures and redemption of debentures. The weightage of these two chapters are 10 marks, 5 to 10 marks. So on an average from company accounts we get 25 marks. 25 marks from company accounts, students. 25 marks. Sir, where they are asking questions from company accounts. See, in question number 6a. Question number 6a, just a minute. Here you can observe. Yeah. Present I am showing you May 2025 question paper. Look at 6a. Question number 6a is from company accounts for 15 marks. Next, question number 5c. Question number 5c. Do remember, question number 5c. Here also we get a question from 5 to 10 marks. 5 to 10 marks. Is it clear, students? Yes, sir. So on an average we get 25 marks from this company accounts, and if we get sometimes we may get a 2 marks MCQ also. Sorry, 2 marks true or false. Sorry, 2 marks true or false. Is it clear, students? Yes, sir. Now look at. Yeah. Here just I would like to show you the weightage given by the ICAI Institute in CA Foundation accounting subject. Not only accounting subject but also other subjects like law and quantitative technique, chapter na duty and economics. Now here you can observe theoretical framework. From theoretical framework, nothing but basic chapters like journal, ledger, trial balance. No, sorry, theoretical framework, these are basics. Okay, accounting process comes under journal, ledger, all those things. From theoretical framework we have weightage of 5 to 10%. 5 to 10%. Okay, purely theoretical aspects. Okay, next, accounting process, nothing but journal, ledger, subsidiary book, cash book, okay, BRS, all those things comes under 30 to 35% weightage. 30 to 35% weightage, do remember. Next, preparation of final accounts of sole proprietor. Here we have already discussed in the previous strategy videos. Preparation of final accounts of sole proprietor, preparation of final accounts of not for profit organization, and accounts from incomplete records. These three constitute 20 to 25% weightage. Do remember, students, 20 to 25% weightage. Guarantee you get minimum 20 marks. 20 marks from these chapters. 3 chapters. Next, partnership and LLP accounts. Partnership and LLP accounts consist of 15 to 20% marks. On an average, you get from partnership now 20 to 25 marks on an average you get from partnership. Is it clear? Partnership consists of what? Introduction to partnership accounts, admission, retirement, death of a partner, and dissolution of partnership form. From these chapters, you get 15% to 20% weightage. Now, last company accounts. Company accounts. From company accounts, you get 15 to 25% weightage also. Means 25 marks easily. 25 marks. Company accounts consist of various chapters: issue, forfeiture and reissue of shares, issue of debentures, bonus issue and right issue, redemption of preference shares, redemption of debentures. These chapters comes under company accounts, and these chapters very easy chapters, students. Why? Provided you should understand the basic idea, logic behind the concept. When you understand the logic behind bonus shares, the concept is easy. Most of the students, they get confusion between redemption of preference shares and redemption of debentures. While they are solving problems on redemption of preference shares, they get confusion. How much amount is transferred to CRR, or how many number of shares to be issued. If you can understand the logic between these two, then redemption of preference shares is easy. Redemption of debentures. Here students may get, sometimes they may get a doubt. Sir, how much percentage is transferred to debenture redemption reserve? 10%. 10% is applied on what amount? And when we get some, in the previous attempt, we have got a question from this redemption of the debentures, issue come redemption of debentures, interest calculation. There students faced little bit difficulty. Is it clear, students? Yes. So understand the logic behind each concept, then automatically the concept becomes very easy. Clear? Today and tomorrow we discuss company accounts, and remaining chapters already marathon is uploaded in the our Shrestha channel. You can go and watch it. Partnership accounts and the remaining chapters like preparation of final accounts of various entities, BRS, depreciation, all those chapters. So marathon is already uploaded. Please go and watch it. Now our main focus today and tomorrow is company accounts. Please spend this 3 to 4 hours of time to get 25 marks. 25 marks. I guarantee that these 3 to 4 hours of investment of your time will fetch you easily 25 marks. 25 marks. Basic idea. I will give you the basics. First basics I will give you. How to answer a question. How to answer the question. Is it clear, students? And do remember, this lecture or this revision class is purely from exam point of view. Don't expect in-depth knowledge. So it's a disclaimer. Don't expect in-depth knowledge. This is just for exam sake. How we attempt the question in the exam. So I will give you that knowledge. Is it clear, students? Are you ready? Yes, sir. Now look at. First we discuss issue, forfeiture and reissue of shares. Issue, forfeiture and reissue of shares. First, sir, what are the various types of problems we get in this from this chapter? What are the various problems that we get from this chapter? Try to understand first. Psychologically, be ready for the type of problems. First type of problem, issue of shares alone. I repeat, first type of problem is issue of shares alone. Exclusively a problem on issue of shares. Issue of shares consists of, again, what? Maybe some shareholders, they calls in arrears and calls in advance concept, over subscription problems. Issue of shares, purely the problem on issue of shares. Okay, over subscription, calls in arrears, calls in advance, this type of problems. Next type of problem is issue and forfeiture. This is second type of problem. First type of problem is what? Only issue of shares. Second type of problem is what? Issue and forfeiture of shares. So they issue the shares and they give you some shareholder or one shareholder, they fail to pay the amount, so forfeit the shares. Till that point, they give you the requirement of the question. Third type of problem that we get is complete chapter. They may test a problem on complete chapter. Means what? Issue, forfeiture and reissue of shares also. Here, but most of the cases, believe me, students, they will ask a question on issue and forfeiture. Issue and forfeiture. Our time bad na, then issue, forfeiture, reissue. Reissue of shares. Is it clear? So these three types of problems we get. These three types of problems we get. See, if you can understand First, basic issue of shares problem. Then you can understand the next concept, issue and forfeiture. If you can understand issue and forfeiture, then you can understand issue, forfeiture and reissue. It's a step-by-step process, sequence of process. Issue of shares, issue and forfeiture, issue, forfeiture, reissue. Is it clear, students? Yes, sir. Now, we start our discussion with the types of shares. I repeat once again, don't expect in-depth knowledge from these videos. Okay, here I am giving you the knowledge which helps to attempt the question or to answer the question in the exam. At least some 70 to 80% you can answer you can attempt the question. Is it clear, students? Yes, sir. And one more thing also, if you know the problem very well, then you can try to solve the whole problem 100%. Suppose if you are not confident about this problem, but at least start solving the problem. If you can complete 50 to 60% of the problem now, then also it is enough. It is enough, because you have attempted at least part of the problem, so that you will get proportionate marks. And this subject will help you to overcome the aggregate marks. I repeat, this subject will help you to overcome the aggregate marks. Do remember, students, very, and that too, this is a first paper. First impression is the best impression. Yes or no? First paper. If you can write the first paper well now, you will get that motivation to write the next papers also. You don't write this, if you don't attempt this paper, don't attempt this paper very well now, then automatically psychologically we feel down. That's why concentrate on this paper. Maximum utilize 3 hours 15 minutes. Maximum utilize 3 hours 15 minutes. 15 minutes reading time, 3 hours. Don't look at your friends. Okay, 3 hours invest. Till now we have studied, till now we have did our hard work. So next 3 hours examination, in the exam, 3 hours, no deviations. After completion of 2 hours now, your friends will go from the exam hall, but don't look at them. You concentrate on your exam. Try to answer, try to remember and answer. Proportionate marks. Do remember this, proportionate marks. If you can attempt proportionately, you will get proportionate marks. Like this, try to get more than 60 plus, so that you can overcome the aggregation of marks. Is it clear, students? Right. Now we enter into the subject. First we discuss issue, forfeiture, reissue. Right. Now, types of shares, we know equity shares and preference shares. Equity shares are the real owners of the business, and preference shares are nothing but these preference shareholders will get preferential rights in two aspects. One is with respect to dividend, two with respect to capital. Before making payment of dividend, or before the payment of dividend to equity shareholders, preference shareholders will get the dividend. And before repayment of capital to the equity shareholders at the time of winding up of the company, these preference shareholders will get their capital first. And on preference shareholders, there is a fixed rate of dividend. Do remember, fixed rate of dividend. This concept will help us in redemption of preference shares. Maybe sometimes we may pay dividend also, along with dividend we may redeem. Okay, right. Equity shares and preference shares. And what are the types of capital? Some students, they may get a doubt between types of shares and types of capital. That is types of shares, equity shares and preference shares. And this is types of capital. Types of capital, as we know, authorized capital, issued capital, subscribed capital, called up capital, paid up capital, and reserve capital. So you know very well about authorized, and authorized capital is what? Nothing but what? It's the maximum capital of the company. Yes, sir. Issued capital, nothing but what? It's a part of authorized capital which is issued to the public. Subscribed capital is nothing but what? The part of issued capital which is subscribed by the public. Called up capital is nothing but what? See, company may issue shares either at face value or at premium. Face value or at premium. Whatever the issue price is there, the company may receive that issue price either in lump sum or in installments. So whatever the amount called up by the company, that is nothing but called up capital. Yes, sir. So it is that part of subscribed capital. Paid up capital is nothing but what? It is the part of called up capital which is paid by the shareholders. Okay. Company called 10 rupees. How much amount paid by the shareholders? Sir, 10 rupees paid, sir, fully paid. Sir, 8 paid, sir, partly paid. Is this clear, students? Yes, sir. Reserve capital is nothing but some portion of the capital is not called by the company during its lifetime. It is called only at the time of winding up of the company. That's a reserve capital. Yes or no? Yes, sir. So authorized, issued, subscribed, called up, paid up. At the time of preparation of notes to accounts, I repeat, notes to accounts. In this chapter, we have to prepare. We prepare for some problems. We prepare balance sheet now. Balance sheet first, equity and liabilities. Next, shareholders funds. After that, share capital. Share capital, we have to prepare working note. Note number 1. There we have to show authorized, issued, subscribed, called up, and paid up. We don't have any these things now. At least we have to show paid up capital. Is this clear, students? Yes, sir. Next, look at shares issue process. Here we have different types of companies now, like one person company, private limited company, public limited company. Yes, sir. We are which company we are talking, sir? Which about which company we are talking, sir? We are not talking about OPC. We are not talking about private limited company. Do remember one thing, in the whole concept of company accounts, we are talking about public limited companies. Public limited companies. Okay. In some problems, sometimes one or two problems, we get a private limited company also. But in this chapter, first chapter, issue, redemption, issue, forfeiture, and reissue of shares, we discuss about only public limited companies which issue shares to the public, or which raise its capital by issue of shares to the public. Do remember, keep this point in your mind. Right. So what is the share issue process? Tell me briefly. I'm explaining prospectus. So company will issue prospectus, and by looking at prospectus, the investor or prospective investor will apply for the shares. Will apply for the shares along with application money. After completion of allotment date, or after completion of applications, now the company will start allotting the shares. After allotment, the company will collect the issue price. Is it clear, students? It's a share issue process, right? Now look at, let us say for example, the total capital of the company is 50 lakhs or 5 crore. Let us say the total capital of the company is 5 crore. This is divided with the 10 rupees face value. This is divided with 10 rupees face value. So total how many shares we get? 50 lakh shares we get. Total capital of, we know that total capital of the company is divided into equal number of units. So each unit is called share. Each unit value is called face value of share. This is fixed for every unit. That basic concept we know now. Yes, sir. So here company issued 50 lakh shares to the public. Here there are three possibilities. One is full subscription, second one is under subscription, third one is over subscription. Our accounting for issue of shares depends on whether the shares are fully subscribed or partly under subscribed or over subscribed. Full subscription, under subscription, easy. Over subscription, students will feel little bit difficulty. Is it clear, students? Yes, sir. Now look at. So when public also applied for the same number of shares, 50 lakh shares, then this situation is called full subscription. If public applied for less than 50 lakh shares, then this is called under subscription. If public applied for more than 50 lakh shares, then it is called over subscription. Full subscription, under subscription, over subscription. Whenever you are reading the problem on issue, forfeiture, and reissue of shares, check the problem whether the shares are fully subscribed or under subscription or over subscription. Based on that, we give accounting treatment. Is this concept clear, students? Yes, sir. So over subscription we discuss once again later. And look at, if we get full subscription now, no problem at all. Whatever the applications we received for 50 lakh shares, we allot 50 lakh shares. But in case of under subscription, we have to check whether 90% of shares are subscribed or not. This is called minimum subscription. Minimum subscription. If we don't get minimum 90%, we don't get applications for minimum 90% of shares. Suppose we have issued 50 lakh shares into 90%. At least we should get for applications for 45 lakh shares. Then only company should start allotment of shares. If company receives applications for less than 90% of the shares, then company has to refund the total application money to the applicants. To avoid this, company will issue shares through underwriters. You know the concept of underwriting? Yes, sir. So in case of underwriting, when we issue shares through underwriters, then if any applications fall below 50 lakh, then underwriters will take the remaining shares. That's a different concept. Okay. But in the problem, maximum cases we get full subscription, or over subscription. Okay, in case of under subscription, what happens? Suppose here in this situation we have received applications for 45 lakhs, so we allot shares for 45 lakhs. Over subscription, suppose we received applications for 60 lakhs shares, but how many shares we can allot? Maximum 50 lakh shares. Applications received for 60 lakh, but we should allot shares for 50 lakh only. Do remember? Is it clear? We cannot allot 60 lakh shares. We can allot only 50 lakh shares. Is this point clear? Yes, sir. Next, look at issue price. Company may issue shares through stock exchange. Through stock exchange, company may issue shares to the public either at par or at premium. At par means it is equal to face value. So issue price is equal to face value. At premium means issue price is more than face value. Let us say, for example, issue price is 15, whereas face value is 10. Face value of one share is 10, but company issued for 15 rupees. So how much extra amount company is collecting? 15 rupees. So what is the meaning of this? Face value is nothing but at the time of winding up of the company, how much amount company will repay to the shareholders? 10 rupees face value. Over and above this 10 rupees, whatever the amount collected by the company, that is called premium amount. Premium amount. Is it clear, students? So let us say company issued shares for 15 rupees. How much extra amount? 5 rupees is the extra amount, and this 5 rupees is called premium amount, and this premium is credited to a separate account called securities premium. Do remember? So in the problem you have to check these things. Issue price you check. So here first check how many shares issued by the company. After that, check full subscription, under subscription, or over subscription. Based on that, we give accounting treatment. Next, check what is the issue price. Is the issue price at par or premium? If it is premium, then whatever the amount collected for premium, that is credited to securities premium account separately. Okay. Next, issue of shares. Come to this concept, issue of shares. So what is the meaning of issue of shares? For consideration, we issue shares means company is issuing shares to somebody, outsiders or management also, whatever it may be. In return, company is issuing shares. In return, company may receive cash, or company may receive any other asset other than cash. So in the problem, check whether issue is for cash or issue of shares for other than cash. Based on that, we have to give accounting treatment. These are the points you have to check while reading the problem. Is it clear, students? Yes, sir. Now, receipt of issue price. Receipt of issue price. Company may receive the issue price lump sum at the time of application itself. Sir, I have company issued prospectus. Yes, sir. Now, I am the public. I want to apply for the shares of the company. So I have to make an application to the company. Not only application, I have to pay some amount. Along with application, I have to pay some amount. This is called application money. Here, suppose the issue price is 15 rupees. Issue price is 15. The company may ask total 15 rupees, either single amount. At the time of making application itself, you pay 15 rupees. Okay, sir. At the time of making application, I am paying 15 rupees over. Or company may receive this 15 rupees in installments. Sir, how many installments? More than one installment. To put it simple, more than one installment. More than one installment means minimum 2 installments. To put it simple, minimum 2 installments. Sir, maximum, it's a discretion of the directors. It's a discretion of the directors. They have to check articles of association also. Yes, sir. So if the company is receiving some amount along with application, that is called first installment, and technically we call it as application money. Next, company is receiving second installment amount, that is called allotment amount. Company is receiving third installment, that is called first call amount. If company receive fourth and final installment, then that is called final call. Suppose company is not making any fourth call. Company is not making any fourth call. Fourth call means first installment application, second installment allotment, third installment final call, first and final call. Or company is not making any third and fourth installment, means only 2 installments, first application, allotment, that's it. Sir, company is not making next three, only one installment, sir. Then it comes under lump sum now. One installment means lump sum. So why I am telling this is each installment, to remember each installment, we have to write two entries. We have to write two entries to remember. For each installment, we have to write two entries. If company is issuing company receives issue price in 4 installments, 4 into 2, 8 entries. Company is receiving one installment means lump sum amount, 1 into 2, 2 entries. Two installments, 2 into 2, 4 entries. Simple logic. Yes, sir. This is regarding receipt of issue price. Next, see here I have given one example. Already I have explained that example. Once again, look at. Suppose number of shares issued. 10 lakh shares. Face value of share is 10. Issue price is 15. Means what is the excess amount we are receiving? 5 rupees. That is premium. Yes, sir. So issue price is nothing but 15. That may be received either lump sum. Means one installment. How many entries we record? 2 entries, sir. Or we are receiving in 3 installments. First installment name application money, second installment name allotment money, third installment name call money. Sir, how much amount we receive, sir? That is the discretion of the directors. Okay, application how much, allotment how much, call money how much, that is decided by the board of directors by looking the provisions of the Companies Act. Is it clear, students? Yes, sir. So this is called application money, next allotment money, next call money. Okay, next. Now we'll discuss some journal entries, accounting part. Now we are coming to accounting part. Quickly revise. First, check which type of shares the company is issuing. I repeat, first check which type of shares the company is issuing, equity shares or preference shares. If the company is issuing equity shares, we use the word equity share in the journal entry. Company is issuing preference shares, then we use the word preference share in the journal entries. Okay, right. Next, at the time of preparation of balance sheet, we have to write authorized, issued, subscribed, called up and paid up in the notes part. Next, check whether and how many shares the company is issued and whether it is full subscription, under subscription or over subscription. They are like checklist. These are like checklist. Next, what is the issue price? Is it at par or at premium? After that, whether the shares are issued at cash or other than cash. Next, what is the receipt of issue price? Whether the issue price is received in lump sum or in installments. They are all checklist and check all these things. Next, look at the journal entries first. Maximum cases we get a problem on issue of shares for cash. Issue of shares for cash. But in this now we have various situations. Look at issue of shares for cash. Issued at par, lump sum amount received, lump sum amount received, lump sum amount received. Issued at par means face value 10, we also receive 10, right? And lump sum amount we are receiving, means how many entries we record? 2 entries. First, tell me what is the process here? Public will apply for the shares along with application money. Means think from company point of view. Now always we have to think from company point of view. Company is receiving money. Yes, sir. So bank account debit. So what is the first transaction? First transaction, tell me, application money received. Application money received. For how many shares you are receiving application money? To check the problem and multiply with the application money. Number of shares applied into application money. Okay. So bank account debit to equity share application and allotment account. The amount is received in lump sum. Bank account debit to equity share application and allotment account. Once after completion of closing date, we call it as closing date. Closing date means last date for application of shares. I repeat, closing date means last date for application of shares. After that, we start recording the entries. Application money received. Total, never use cash account. Use only bank account because it is a company. Always use bank account. Don't use cash account. So bank account debit to equity share. Equity share. If it is preference shares, na preference share. Equity share. If it is equity share, equity share. If it is preference share, use the word preference share. Application and allotment. Application and allotment account. Next, after completion of closing date, now we analyze the applications and we allot the shares to the public. So on allotment of shares, application money transferred to share capital. Application money transferred to share capital. Here we received amount, na? We received amount from whom? Applicants, not shareholders. We received amount from applicants. When they become shareholder, when we allot shares to the applicant, then he become shareholder. Do remember, till that time he is just applicant, right? So this amount is towards what? Share capital only? Yes sir. But till the allotment of share, we are keeping the amount in a separate account called equity share application and allotment account. Hope you are following. Yes sir. Now after allotment of share, whatever the amount we have kept in a separate account called equity share application allotment, that is transferred to which account? Share capital account. Share capital account. Okay. Equity share application allotment account debit to share capital account. Is this entry clear, students? Yes sir. Now here itself I will explain one more entry. Issue of issued at premium. Issued at premium. Here I have written issued at par. Visualize issue at premium. Issue at premium means we also receive some extra amount. In addition to face value, we also receive some extra amount. Is it clear, students? Yes sir. So if shares are issued at par, we receive face value. If shares are issued at premium, we receive total premium amount, face value plus premium. In this example, assume 15 rupees is the issue price. 10 rupees face value, 5 rupees is the issue price. 15 rupees. So at the time of application itself, we receive how much? 15 rupees, sir. How much amount we receive? 15 rupees, sir. 15 rupees. Right? Now tell me, at the time of allotment, check. This 15 rupees consists of two components. One is capital, another one is premium. Capital, keep it in capital account. Premium, keep it in premium account. Over. So equity share application and allotment account debit 15 to equity share capital 10 rupees. Capital account. Premium account. We use the word securities premium account 5 rupees. Securities premium account 5 rupees. Over. Is it clear, students? Yes. In this scenario, if we have oversubscription, then return the amount to the equity shareholders. Return the amount to the equity shareholders. I mean applicants, sorry, applicants. Then what is the entry we record? At the time of receipt, what is the entry you have recorded? Bank to equity share application and allotment. Now return. You are returning, na, entry becomes reverse. Clear? Suppose directors are refunding amount to the excess amount, whatever the excess amount received, that is refunding. Means equity share application and allotment account debit to bank account. Over. So here we have to use some common sense also. Based on the situation, we have to write the entry. This purely depends on journal entries. Okay, students. Next. Now look at issue of shares for cash. Issue of shares for cash issued at par. Amount received in installments. Previously we have discussed what? Issue of shares for cash issued at par, premium. Par or premium, lump sum amount received. But now we are discussing entries for installments. Receipt in installments. Use our common sense. When we receive amount in one installment, we have recorded 2 entries. When we receive amount in various installment, for each installment I already said we record 2 entries. Here very easy. Recording entries easy, students, but the difficult part is amount calculation. Difficult part is amount calculation. Do remember. Is it clear, everybody? Yes sir. Yes sir. Now look at issue of shares for cash issued at par, amount received in installment. Right sir. First 2 entries, no change. Difference between this situation and this situation is what? Here we receive total amount, but here we receive only application money. Application money. Let us say issue price is 10. We are receiving this in 3 installments. 2 rupees, 3 rupees, 5 rupees. 2, 3, 5. Do remember 2, 3, 5. So how much amount you receive at the time of application? 2 rupees. Allotment 3 rupees. Final call 5 rupees. So in the first entry, how much amount we record the entry? 2 rupees. Logic simple. How much amount we record the entry? 2 rupees. Previous problem 15 rupees. Issue price total. But here we receive in installments. Okay, students? Yes, sir. So that's why I have written here this one. Very, very important. Number of shares applied. Not number of shares issued. Number of shares applied. So why we are not taking number of shares issued? Why? Because public may apply for exactly equal to issued shares or less than or more than. That's why here I am using the word applied. In the problem, check it. How many shares you issued, how many shares public applied. So here we have to record entry for applied. Number of shares applied into application money per share. After the closing date, now we transfer that application money to share capital. Entry equity share application to equity share capital. If it is equity share, use the word equity share. If it is preference share, use the word preference share. Dear students, and do remember, number of shares allotted. Number of shares allotted. Do remember. Here, number of shares applied. Here, number of shares allotted. Once these two entries completed, na, next from next entries onwards, always we take number of shares allotted. First two entries only, students will get confusion. First entry is always at applied, number of shares applied into application money. Second share, number of shares allotted. Public applied for some shares, but how many shares you allotted? Record the entry for that into application money. Sir, suppose number of shares applied are 10 lakhs, but number of shares issued are 5 lakhs. Means oversubscription. Yes, sir. How to deal with this excess money? That is the important concept in this problem. Oversubscription that we discuss slowly. Is it clear? Yes, sir. Next one. Refund of excess money. Suppose company is refunding total excess money. Fine. Very good. Reverse the first entry. Reversal of first entry. Look at. Reversal of first entry. Refund. Equity share application to bank. Next step. Allotment amount due. Now, once after allotment of shares, now they become our shareholders. They become our shareholders. Actually, face value is how much? Face value is 10. But how much amount they paid? 2. Allotment they have to pay 3. Final call 5. They paid only 2. Now we ask the shareholder, Mr. Shareholder, now you became shareholder of our company. Please pay us 3 rupees of allotment amount. Today I am calling the shareholder. Shareholder, it's a call for you to pay the allotment money. And we are giving some 15 days time or 1 month time or 45 days time. From today, next within 30 days, please pay allotment amount. Yes, sir. Means whatever the amount we call it today, that becomes due from shareholders. Yes, sir. So we have to record the entry for allotment amount due. What's the entry for allotment amount due? Allotment amount due means amount we have to receive or we should receive from shareholder. So it becomes debit. Share allotment account debit. Share allotment account debit to share capital account. To share capital account. Is it clear? See, this allotment money, nothing but capital, na? That's why allotment amount we are crediting to capital. Next, allotment amount received. Received. Now we received the allotment amount. Very good, sir. Received means what? Bank account debit. Earlier, when amount was due, na, we debited share allotment. Now credit that share allotment. Over. Can you tell me the combined entry for this? Can you tell me the combined entry for this? Yes, sir. Bank account debit to share capital, sir. Because share allotment debit, share allotment credit. Cancel. Bank to share capital. Over. Now come to last installment. Last installment. Share call money due. Call money due. Again, today I am calling after allotment amount completed. Today I am calling the final call. 3 installment or 4 installment, whatever it may be. Share first call. If it is first call, first call. Or if it is final call, final call. You can use anything. Right. To share capital. When we receive final call amount, na, bank account debit to share first or final call account. Bank account debit to share first or final call account. Is this concept clear, students? Bank account debit to share first or final call account. Hope you are following. Yes, sir. Now, next step. Yeah, premium already we have discussed. Securities premium. Calls in arrears. Before discussion of calls in arrears, we try to solve one simple problem. One simple problem on this concept. One simple problem. Observe carefully. Just to understand the concept. Okay. Now look at problem number 2, illustration 2 from your study material. Here I have taken study material problems and previous exam problems also. So we try to cover maximum number of problems. Okay. Even if time permits, now after 10 o'clock also, if time permits, I will take extra 15 to half an hour. No issues at all. But today our target is to revise this issue, forfeiture and reissue, bonus issue, right issue, and redemption of preferences. Once you understand this concept, those next two concepts are very easy. Okay. A company invited invited applications for 10,000 shares. How many shares? 10,000 shares of 50 each. What is this 50 face value? This 50 is nothing but face value or nominal value or par value of share. On application 15, allotment 20, first and final call 15. Now you people tell me, number of shares issued 10,000, face value 50, issue price, because face value may be different from issue price. In this problem the issue price is also 50 rupees. Okay, how this 50 rupees is received? Try to recollect. The 50 rupees may be received lump sum or in installment more than 2 installment. But in this problem, how many installment we are receiving? 3 installment. In each installment, how much amount we are receiving? Application 15, allotment 20, first and final call 15. Okay sir, total 50 rupees. Applications are received for 10,000 shares. 10,000 shares means 10,000 shares issued, 10,000 shares applied. Tell me, full subscription, over subscription, or under subscription? Sir, full subscription, sir. Full subscription, no problem at all. Over subscription, every problem. There is a problem. Over subscription is only the problem. Right, sir? And all the applicants are allotted the number of shares they have applied for, and installment money was duly received by the company. What's the meaning of this? 10,000 shares applied, 10,000 shares allotted. Means application money received on 10,000 shares. Shares allotted 10,000. After that we call allotment money na? Yes sir. So allotment money also called. They said all installments received. All installment money was duly received. Means application money received, allotment money received, first and final call money also received. Don't expect this type of problem in the exam. This is only for understanding the basic concept. The past journal entries in the books of the company. Tell me quickly. First entry. First entry. Application money received. Sequence of. See, whatever the problem they have given a sequence. So problem contains sequence of transactions. Identify the first transaction. Transaction means some amount should be involved. Identify. Sir, 10,000 shares issued, sir. No amount involved. Application money received, sir. Yes, amount involved. So 10,000 shares into application money received, how much? 15, sir. 15. Means 10,000 into 15, we receive 1,50,000. Entry bank account debit to equity share application account. If nothing is given, whether it is equity or preference, use the word equity. No issues at all. So what's the entry? Finally we got bank account debit to equity share application account. Next, immediately next entry, allot the shares. Allotment means application money we transfer to capital. Entry equity share application to share capital account. 1,50,000, 1,50,000. After allotment of shares, the applicants become shareholders. Now call the allotment amount. So equity share allotment account debit. Tell me how many shares we have allotted? 10,000. Allotment amount due 20, 2 lakhs. Over. Next, receive. At the time of receipt, check whether amount is received on all shares or not. Here again students will face little bit difficulty. Check whether all amounts was received or not. Okay students? Yes sir. Now in this problem they said all amounts received. So bank account debit to equity share allotment 2 lakhs, 2 lakhs. Over sir. Next, first and final call amount due. Equity share first and final call account debit to equity share capital. How many shares? 10,000 shares. 10,000 into 15. 1.5 lakh, 1.5 lakh. Next, receipt of first and final call. Bank account debit to equity share first and final call 1.5 lakh, 1.5 lakh. Over. If you observe the problem, actually how many shares we have issued? Tell me. Sir, 10,000 shares sir. How many shares we have issued? 10,000 shares sir. Sir, what is the issue price? 50 rupees. Is this 50 total face value? Yes sir. Means capital. Can you tell me how much capital we have total? 5 lakh sir. 5 lakh is our capital. 5 lakh is our capital. Check whether total amount of capital received or not. Yes sir. Here received 1.5 lakh. Here received 2 lakhs. Here we received 1.5 lakh. Total what is the capital? Tell me. 1.5 to 1.5. 5 lakh capital received. Yes sir. What is the entry for receipt of capital? In case of sole proprietor, bank account debit to capital sir. In case of partnership, bank account debit to partners capital sir. Now look at, means bank account debit. Check whether capital account is also created for 5 lakhs or not. Yes sir. Equity share capital 1.5 lakh credit. Here also equity share capital 1.5 lakh credit. Here also equity share capital 2 lakhs credit. Observe. Understood? Finally, if you can combine all these entries, what's the entry? Bank account debit to share capital. Over. But directly, see, total capital amount we are not receiving at a time. Na? In installment we are receiving. We are also recording entries in installments. Over. Yes sir. Next, look at Another problem, illustration 3. On 1st April 2001, 1st April 2001, here dates are given, be careful. When dates are given, be careful. A Limited issued 43,000 shares of 100 each payable as follows: 20 on application, 30 on allotment, 25 on 1st October 2001, and 25 on 1st February 2001. Can you tell me total how many installments? 4 installments, sir. How many installments? 4 installments. How many shares issued? Number of shares issued 43. Face value 50. Issue price nothing is given, means issued at par. Issued at par. Amount received lump sum or in installments, sir? Installments, sir. How many installments? 4 installments, sir. 4 installments means how many entries you record? 4 into 2, 8 entries I record, sir. Here, how many shares issued? 43. But public subscribed, check it. By 20th May, 40,000 shares were applied for and all applications were accepted. Can you tell me full subscription, under subscription or over subscription? Under subscription, sir. 43,000, 40,000 means under subscription. Yes, sir. Calculate 90%. If you want, you can calculate 90%. No issues. Into 90%. How many shares you get? 38,700. How many shares you are getting? 38,700. Don't simply write, sir, minimum subscription not received. Hence, minimum subscription received 38,700 na, means 40,000 applications received. Sometimes, suppose in the problem, even if you get applications for less than 90%, you just mention the point that minimum subscription not received. Just mention that point, but give accounting treatment as it is. Don't simply write minimum subscription not received. Hence, we are returning the total amount to the applicants. Don't assume like that. Give accounting treatment. Give accounting treatment and just make a note of that point. Dear students, yes, sir. Now look at first entry. First entry is application money. First entry is recorded for how many shares? Tell me. Not 43. 40,000 shares. For how many shares? 40,000 shares we record the entry. Why? Number of shares applied. Number of shares applied. Don't forget this thing. Don't forget this. Number of shares applied. Number of shares applied. Don't forget. Okay, sir. Fine. Now look at first entry. Bank account debit to share application account. 40,000 shares into 20 rupees application money. Na? So 40,000 into 20. 40,000 into 20. 8 lakhs rupees. 40,000 into 20, 8 lakhs rupees. That is our first entry. Look at dates are given. Very, very important. Dates are given. Check it. So bank account debit to share application account. So 40,000 shares into 20. Next, after that we allot the shares. On what date the shares are allotted? Look at allotment was made on 1st June. 1st June we allotted the shares. Means application money transferred to allotment. So application account debit to capital account 8 lakhs, 8 lakhs. Now we allotted shares. They become our shareholders. Means call the final allotment amount. What is the entry for allotment amount due? Share allotment account debit to share capital. Share allotment to share capital. How many shares? 40,000. How many shares? 40,000. Into what is the application amount? Tell me. Sorry, allotment amount. Tell me 30. So total 12 lakh. Total 12 lakh. Now immediately next entry, receipt of allotment. Sir, on what date the amount is received, sir? Look at all sums due on allotment were received by 15th July. We called on 1st July and we received on 15th July. It record the entry. Bank account debit to their allotment account. 12 lakhs total amount received. Next, first call made on what date? 1st October 2001. First call made on 1st October 2001. So this date we have to write 1st October. First call entry. Equity share first call account debit to equity share capital account. 40,000 shares into 25, 10 lakhs. 45,000 shares into 25, 10 lakhs. 45,000 shares into 25, 10 lakhs. Over. On what date this amount is received, sir? Look at in the problem. Those on first call were received on 20th October. We received first call on 20th October. Is it clear, students? Yes, sir. So on 20th October, record the entry for receipt of shares. Means bank account debit to share first call account. Over. Yes, sir. Final call is called on what date? 1st February 2022. Final call was made on what date? 1st February 2022. Final call amount due. Equity share final call account debit to equity share capital account. 40,000 into 25, 10 lakhs, 10 lakhs. Over. Yes, sir. 10 lakhs, 10 lakhs. Over, sir. Next, look at the problem. Journalize the transactions when accounts were closed on 31st March 2022. Here students get it out. Sir, final, they did not mention whether final call amount received or not. To just observe the previous patterns. So what is the observation, sir? Look at here. We called amount on 1st June, received on 15th July. Means how much time gap we have? 1.5 month time gap we have. Second call, I mean first call, 1st October we called. 20th October we received. Means within 20 days we received the amount. So time gap is reduced. Now, this is made on 1st February. They are asking to record entries on 31st March. Means assume the final call amount was received. Assume the final call amount was received. Is it clear, students? Yes, sir. With that assumption, we record the entry. Mention the 31st March entry, 31st date. Okay. Bank account debit to share second and final call 10 lakhs, 10 lakhs. Is it clear, students? So it's a very simple problem, right? Now look at, we discuss one simple concept here. Yeah. Regarding premium. Look at. So here premium amount may be collected. Here I have explained about premium. Whenever we receive extra premium or extra amount over and above its face value, that amount is separately credited to which account? Securities premium account. Here in this amount received in installments, how do we account for securities premium? Check in which installment, I repeat, in which installment you received securities premium. At the time of recording that entry, transfer that amount to securities premium account. Suppose, if, observe carefully, securities premium is received along with application money. Securities premium received along with application money. Application money means first receive the amount. After that, here we are recording to share capital. Na? So here write extra account, that is securities premium. If the problem say premium is received in allotment. Okay, sir, fine. Suppose if the problem says amount received in allotment, premium amount received along with allotment amount. Yes. At the time of recording allotment amount due, record the entry or recognize the securities premium. How, sir? Share allotment account debit to share capital account to securities premium account. Over. At the time of recording allotment amount due. Suppose if problem says premium amount received along with share call money. Okay, sir. At the time of recording call money due, got the one more account called securities premium with the securities premium amount portion. Suppose 10 rupees, 5 rupees here. Out of 5 rupees, 3 rupees capital, 2 rupees premium. Okay. 3 rupees capital, 2 rupees premium. I hope you understood this. Yes, sir. So this is the accounting for securities premium. Okay, right. Now we try to solve one problem on securities premium. Look at, after that we go for calls in arrears. Yeah. Look at, this is another important problem. Yeah, I mean important model. Observe carefully. Illustration 5. The Delhi Artware. The Delhi Artware Limited issued 50,000 equity shares of 100 each and 1 lakh preference shares of 100 each. Two classes of shares are issued. I repeat, two classes of shares are issued. 50,000 and 1 lakh. Okay, sir. The share capital was to be collected as follows. This column is for equity shares and this column is for preference shares. Application 25-20. Allotment 20-30. First call 30-20. Final call 25-30. No confusions. Think whenever you are recording entries for equity share capital, record equity share, preference share, record preference share. That's it. And how many equity shares issued? 50,000. Preference shares 1 lakh. Face value 100. Here face value 100. What about the issue price? They did not mention anything, means face value. All these shares were subscribed. All the shares were subscribed. Yes, sir. Final call was received on 42,000 shares and 88,000 preference shares. Actually, we have issued 50,000 shares now, but final call is received on 42,000 shares only. Means on 8,000 shares we have not received the amount. And we have issued 1 lakh preference shares, but on final call we have received only amount on 88,000 shares. Means on 12,000 shares we have not received amount. We called to pay the amount, but public failed to pay the amount. We called the amount, but public failed to pay the amount. This situation is called calls in arrears. This situation is called calls in arrears. This situation is called calls in arrears. Whatever the amount we have not received, that amount we transfer to calls in arrears account. That's it. Simple concept. Whatever the amount due, suppose amount due is 10,000, sir, but received only 8,000, sir. Received how much? 8,000, sir. Not received how much? 2,000, sir. This 2,000 we transfer to calls in arrears account. Received 8,000, yes, sir. Bank account debit 8,000. How much amount not received? 2,000, sir. Calls in arrears account debit 2,000. 2. Equity share allotment or call, whatever it may be. Over. Simple concept of calls in arrears. Right. Prepare the cash book. This is very, very important, student. The problem they are asking cash book means cash transaction. Cash transaction includes bank transaction. Do remember, when we prepare cash column, cash book with cash and bank columns, now cash transactions, cash column, bank transaction, bank column. Here the idea behind cash book, preparation of cash book, is nothing but record the cash transactions in cash book and non-cash transactions in the journal, and journalize the remaining transactions in the books of the company. Out of the transactions, identify which is cash transaction and which is non-cash transaction. Which is cash transaction? Application money received, allotment money received, first call money received, final call money received. These are cash transactions. Non-cash means application amount transferred to capital, allotment amount due, first call money due. Yeah, one student is asking a doubt. Yes, sometimes we may get a question to prepare the balance sheet, but not whole balance sheet. As per schedule 3 only, but not whole balance sheet, only few items. The two regarding share capital. Regarding share capital and assets side, only cash balance. I hope your doubt is clear. Right. Now look at, is it clear? Now in this case, we have to draw two formats. One is cash book format in the books of Delhi Artware Limited, the Delhi Artware Limited cash book. Cash only draw only one column, that is bank column. After that, journal format. Over. Cash transaction, cash book. Non-cash transaction, journal. Is it clear, students? Yes, sir. Now record the first entry. Receipt of application money. Sir, in this problem, they did not mention for how many shares applications received, sir. Implied full subscription. Implied full subscription. Means they mentioned one point, look at. All these shares were subscribed. Means all the 50,000 shares are subscribed. Equity. All the 1 lakh shares are subscribed of preference shares. Now how do we record the entry? First entry. Bank account debit to equity share application to preference share application. Equity share application, preference share application. Is it clear, students? Equity share application, preference share application. Both amounts you can write simultaneously. Bank account debit to equity share application. Equity shares how many? 50,000 into 25. Here 1 lakh into 20. Allotment 50,000 into 20. First call 50,000 into 30. But final call you can observe. Due entry we record for 50,000, but receipt entry we record for 42,000. Receipt entry we record for 42,000. Look at receipt entry, because we received only amount on 42,000 shares. Then what about preference shares? Applications received on 1 lakh shares. Allotment also we receive due and received on 1 lakh shares. First calls also due on 1 lakh shares and received also 1 lakh shares. But whereas final call due on 1 lakh shares, whereas received on 88,000 shares. Received on 88,000 shares. Is it clear, students? Yes, sir. Very, very important. Very, very important. Observe carefully. Clear? Over. Due on all shares, whereas receipt, look at, except final call, remaining all shares, due and receipt both are equal. Final call due 50,000 equity, but received only 42,000. Preference shares due 1 lakh, but received only 88,000 shares. Is it clear, students? Yes, sir. Now look at. Will you try to solve this problem? I have explained now. Will you try to solve so that we can go to other problem? Okay. So try to solve this problem. Right. Now look at calls in arrears accounting treatment. Already we have explained, but here one more concept comes, that is interest to call calculation. Interest calculation. Calls in arrears means what? Today I have called the amount and I have given some 15 days, 1 month of time. Within that time, if you pay within that time now, then there is no concept called interest. Suppose after completion of due date, you have failed to pay the amount. Now you have to pay the amount along with some interest. Next, suppose you are paying after 1 month or 2 months or after 3 months, you are paying the amount. So you have to pay this amount, arrears amount along with interest. For how much interest, sir? Interest is calculated at 10%. If nothing is given in the problem, it is implied 10% is interest. Nothing is given, 10% is the implied percentage. If something is given, 8% or 9%, 5% is given, you take that percentage. Here, students? Yes, sir. Now just observe the accounting treatment here for calls in arrears. Look at calls in arrears. Issue price called by the company but failed to pay by the shareholder. That may be at the time of receiving allotment money. Suppose some shareholders may pay application money. Every shareholder will pay. Every applicant will pay application money, because if you are not paying any application money now, you cannot become shareholder. Cannot become an applicant first. So how can you become shareholder? Here at the time of receiving allotment amount, then what is the entry we record? Observe, bank account debit. Whatever the amount is not received, debit to calls in arrears account to share allotment account 10,000. Suppose if amount is not received at time of call money, then bank account debit, same, calls in arrears to share call account. Here share allotment, here share call. That's it. Clear? So on receipt of calls in arrears amount, later means after some period of time, along with interest. For interest due, first we have to record the entry for interest due. Interest become income for the company. Okay, from receivable from shareholders now. So shareholders account debit to interest account. Shareholders account debit to interest account. Next, receipt of interest along with the calls in arrears. This arrears amount plus interest. Total amount we receive. Yes, sir. Bank account debit to calls in arrears to shareholders account. Earlier calls in arrears debited now. Now we credit. Next, shareholders account debited now credit. Over. This is the accounting treatment for calls in arrears. How much? What is the interest rate? 10%. This is implied. Okay. Next, interest at 10% per annum is charged on calls in arrears. Now come to next concept, that is calls in advance. Next concept, calls in advance. So what is the meaning of calls in advance, sir? Calls in advance is nothing but, suppose today I have made a call of allotment. I repeat, today I made a call of allotment. Today I made a call of allotment, but one of the shareholder paid a future calls amount also along with allotment money. Allotment amount payable 5 rupees. Future call amount is payable 3 rupees. Actually today it is enough to pay 5 rupees by the shareholder, but he paid how much? 8 rupees. Future call amount also he paid. Means how much amount he paid? 8 rupees paid. What? 5 rupees anyway he has to pay. Whatever the excess amount he paid now, that is called calls in advance. Is called calls in advance. This amount is not yet called by the company but paid by the shareholder in advance. Means he will not pay the amount in the future. The future we make final call now, at that point of time he will not pay that amount. He will not pay that amount. Hope you are following. Yes, sir. This is the concept of calls in advance. Do remember, on calls in advance also we have interest concept. Interest at the rate of 12% per annum. Interest at the rate of 12% per annum. Very, very important. Even though they did not mention in the question, they did 99.99% they did not mention about interest concept in the problem. But you have to take it implied. Calls in advance, we have to remember, calls in advance 12%, calls in arrears 10%. No other choice. Okay. Now there are three possibilities. First possibility is what? At the time of application itself, they may pay total amount. Application, they may pay total amount. Okay. Second one, allotment, or at the time of first call itself. First call itself. In here, what is the entry we record? Share application to calls in advance. Share application to calls in advance after adjusting allotment amount. Okay. Now at the time of making allotment, he paid amount. Simple. Bank account debit to calls in advance. He received extra 3 rupees na, bank account debit. This amount is for advance, calls in advance. Suppose first call he paid, along with first call na, he also paid the final call amount. In that case, simple, bank account debit to calls in advance. Simple. You are receiving amount, but it is for future call, so calls in advance. This account balance we adjust against the future calls. Against the future calls. How, sir? Look at calls in advance credited now. Adjusting means debit. Calls in advance account debit. If this advance is adjusted for share allotment credit, or if this amount is adjusted for first call now, first call account credit. If this amount is adjusted for final call now, final call account credit. Suppose what is the entry for allotment amount due? Bank account debit. Bank account debit to share allotment. What is the entry for receipt of allotment amount? Bank account debit to share allotment. But already this allotment amount received na, so adjust. No bank account, calls in advance. Over. What is the entry for receipt of first call? Bank account debit to first call. Now this amount is already received now, so bank account is not debited. Calls in advance to first call. Like this we adjust. On this amount na, we have to pay interest due. Here the problem comes, how to calculate interest. Sir, interest is calculated very simple, sir. Advance amount. Because this is important model of problem. Calls in advance, calls in arrears. Okay. Look at interest calculation. Interest is equal to whatever the advance amount he paid into rate by 100. If nothing is given, 12%. Into time by 12 months or 365 days. 12 months or 365 days. Sir, how to calculate time period, sir? The time is calculated between receipt date, receipt date and next installment date. Suppose today 16/1 we received amount. Next installment date, assume next installment date is 16/3. 16/3. How many months time gap we have? 2 months time gap here we have. So we take 2 by 12. Suppose if you can calculate days now, then you can calculate days. Number of days divided by 365. This is how we calculate interest. Same is applied for calls in arrears also. In the place of advance, what we take? Arrears amount. Arrears into rate of interest. Rate by 100, 10% into time period. Time period is nothing but amount due date to the date of payment. I repeat, last date of making the payment. What is the last date to pay the amount? From that date to the payment date. Is it clear, students? So in the problem, I repeat, this is very, very important model of problem, calls in arrears and calls in advance. In the problem, they did not mention the interest rates, interest amount also. Sometimes they give you interest amount. Clear? Hope you understood this concept of calls in advance, calls in arrears. After this, we go for oversubscription. After that, forfeiture, reissue completed. Okay. Now it almost it is 1 hour, 70 minutes over. Next 30 minutes, I will try to complete this issue, forfeiture and reissue. Next, I start bonus issue and rights issue. Right. After that, redemption of preference shares. Yeah. Now look at here. We try to solve one problem on calls in arrears and calls in advance. Right? Yeah. Look at this is a problem on calls in advance. This is a problem on calls in advance. Observe carefully. Practical question 1. Practical question 1 is on the concept of instead of practical question 1, I will try to solve practical question 2. I will explain practical question 1. 2 we try to solve. Look at practical question 1 once. X Limited invited applications for 10 lakh shares of 100 is payable as follows. How many shares? 10 lakh shares. What is the face value? 100. Face value 100. Check the issue price. Issue price is not given, so assume it is 100 face value. Application 20, allotment. See, dates are given, be careful. 30, first call 30, next call, final call 20. So 100 rupees. All the shares were applied for and allotted. A shareholder holding 20,000 shares paid the whole amount due along with allotment amount. Do remember. At what time the amount is received? At the time of allotment. Is it calls in advance or calls in arrears or calls in advance? What's the interest rate? Interest rate is not given. Look at journalize the transactions assuming all sums due were received. All sums due were received means allotment amount received, first call received, and final call also received. Interest was paid to the shareholder concerned on 1st February 2023. On what date we paid interest? Tell me. 1st February. Look at the 1st February date. 1st February is the final call amount due date. Very, very important problem. Final call amount due date. On that date we paid the interest. Now look at first entry. Don't forget the sequence of transaction. Application money received, transfer of application money to capital, allotment amount due, receipt of allotment, first call amount due, receipt of first call, final call amount due, receipt of final call. Sequence of steps. Look at first application money due. Yes sir. Bank account debit 10 lakh shares into application amount 20. 10 lakhs into 20, 20 lakhs. Is it clear, students? Yes sir. Sorry, 2 crores. Right. Bank account debit May 1st. Bank account debit to share application account. 10 lakh shares into 20 rupees. Is it clear, students? So 200 lakhs total. 10 lakhs into 20. 2 crores now. So total 200 lakhs. Here amount is given in lakhs. If you want, you can write in crores also. In that case, you write 2 crores. In that case, you write 2 crores. Or you can write amount in thousands also. Is it clear, students? Yes, sir. Next one. May 1st observe. Share application account debit. Share application debit 300. Next, share allotment debit 300. Just a minute. Yeah, they have recorded one combined entry. One combined entry they recorded. Observe carefully. The combined entry means what, sir? Here 10 lakhs into 30 rupees. See, you get? Don't get any confusions. What is our second entry? Tell me. Application account debit to share capital. Application account debit to share capital. How much amount we have to write? Tell me. 200, 200. Next entry is what? Share allotment account debit to share capital. How much? 300, 300. But here they have recorded combined entry. If you want, you can divide and write separate entries. After this, what is the next entry? Tell me. Share application to share capital. Next entry, share allotment due. Share allotment account debit to share capital account. Clear? So total finally, how much amount they credited? Tell me. 500. Instead of writing one entry, you can write two entries. No issues at all. Next, receipt of allotment amount. Tell me. At the time of receipt of allotment amount, one shareholder who is holding 20,000 shares, he paid the further calls also. Actually, on allotment, how much amount he has to pay? 30. Further calls 30 plus 20, 50. Means on 20,000 shares, we received 50 rupees. So 20,000 into 15, it comes to 10 lakhs. 10 lakhs means already here we have recorded in lakhs now, means 10. 10. So look at how the entry is recorded. Bank account debit. Actually, on allotment, we should receive 300 plus 10 rupees. So total became 310. Total became 310. Next, share allotment 300, calls in advance 10, over. Receipt of call money, over. Next, first call amount due. First call amount due is on 10 lakh shares into 30 rupees, 300 lakhs. 300 lakhs. Share capital 300 lakhs. Now, out of 300 lakhs, how much amount we will not receive? Total 10 lakh shares now. So, we will not receive amount on 20,000 shares into 30, that is 6 lakhs. 6 lakhs amount will not receive. 6 lakhs. 6 lakhs amount will not receive. We receive only 294 lakh. 294 lakh amount we receive. Why? Because already 6 lakhs is received in advance. And whatever the calls in advance credited 10 lakhs, na, this we adjust against first call. How, sir? Look at bank account debit. Bank account debit. How do we get? Out of 10 lakh shares, on 20,000 shares will not receive amount, na? Means what's the remaining shares? 9 lakh 80. 9 lakh 80 into 30 rupees. 9 lakh 80 into 30 rupees, 294. Calls in advance we adjust against 20,000 shares. 20,000 shares into 30, it comes to 6 lakhs, over. To share first call. Understood? So adjustment date will get calls in advance to share first call. 6 over. Next one, final call amount due. Final call amount due entry, share final call account debit to share capital account. How many shares? 10 lakh shares. 10 lakh shares into 20 rupees. 10 lakh shares into 20 rupees, 200. How much amount will not receive? Tell me. 20,000 shares into 20 rupees. 4 lakhs amount will not receive. Why? Because already received in advance, na? Already received in advance. Yes, sir. So, bank account debit, we receive amount on 9,80,000 shares into 20. How much amount? 196. 4 lakh we adjust against calls in advance. Yes, sir. So, calls in advance account 4. Share final call 200. Is this clear, students? Yes, sir. Next, interest. Interest is expense for us. So, debit. Interest on calls in advance account debit to shareholders account. How much? Now, look at how do we calculate. What is the receipt amount date? On what date we received amount? On May 1st we received the amount. What is the next installment date? Next installment date is October 1st. How much time gap we have between these dates? May, June, July, August, September. 5 months time gap we have. On 5 months, for 5 months we pay interest on 10 lakhs. Interest on 10 lakhs. Very, very important. Observe. Interest on 10 lakhs we pay. For how many months? 5 months. Clear. Now look at the interest on calls in advance paid is, here they have given the calculation in a different manner, but I will calculate straight away. Look at 10 lakhs into how many months? What is the rate of interest? 12% into how many months? 5 months. Sorry, 5 months. 5 by 12. How much amount you are getting? 10 lakh into 12% into 5 by 12. 50,000 we get. Both calculations, same answer you get, 10 lakhs. Okay. On 1st October, how much amount we adjusted? 6 lakhs. Means how much advance amount we have now? 4 lakhs. On this 4 lakhs, we calculate interest from 1st October to 1st February. 1st February is the due date. From October calculate. October, November, December, January. 4 months. 4 months we calculate interest. On how much? 4 lakhs. So 4 lakhs into 12 by 100 into 4 months, now 4 by 12. How much you are getting? 4 lakhs into 12% into 4 by 12. It comes to 16,000. Total how much? 66,000. Here also how much we got? 66,000. Same answer. But here 6 lakhs they calculated for 5 months, 4 lakhs they calculated for 9 months. Both calculations correct. I hope this problem is clear. Very important model of problem. Now come to practical question 2, because we are running out of time. Look at a limited company with an authorized capital of 20 lakh divided into shares of 100 each. I already said the time for this live is approximately 2 to 2.5 hours. Okay, 2 to 2.5 hours. Clear? Okay. Now, issued for subscription 10,000 shares payable at 25 per share on application, 30 per share on allotment, 20 per share on first call, 3 months after allotment, and the balance as and when required. Balance as and when required to get. So, how many shares we issued? Total authorized capital we have 20 lakh divided into shares of 100 each. Means how many number of shares can you tell me? 20 lakhs divided by 100. We get total 20,000 shares. How many number of shares? 20,000 shares. Okay. Out of 20,000 shares issued for subscription 10,000 shares. Means how much capital is issued? 10 lakhs capital is issued. Total 20,000 shares na. Total 20,000 shares. How many shares we are issuing? 10,000 shares. You remember. Issue price payable 25 per share, application 30, allotment 20, first call 3 months after allotment, and balance. Can you tell me the balance amount? Here face value is 100. In this problem they did not mention about issue price. Assume it is issued at face value. So 100 minus 25, 30, 55 minus 20, 75. 55 minus 20, 75. So balance amount is how much? 25. This is on final call whenever required. Means 4 installments we are receiving. Next, subscription list closed on January 31st, 2022. Subscription list closed on January 31st, 2022. January 31st, 2022, we have to record entry for application money received. An application money on 10,000 shares was duly received and allotment was made on 1st March 2022. We received amount on 31st January, but allotment started from March 1st. 10,000 shares. For 10,000 shares, we received applications, means full subscription. All amounts due were received within 1 month. Within 1 month of the date they were called. Means what? Sir, March 1st, we called the allotment amount. Within 1 month, means by the end of March or 1st April. On 1st April, we should receive that amount. Is it clear, students? Yes, sir. The allotment was received. The allotment amount was received in full, but when the first call was made, one shareholder failed to pay the amount on 1,000 shares held by him, and another shareholder with 500 shares paid the entire amount on his shares. This happened on at the time of first call. This was happened at the time of first call. At the time of first call, what happened? Total 10,000 shares. Na? On 10,000 shares, we have not received amount on 1,000 shares. Means we received amount on 9,000 shares. First call. Along with this amount, one shareholder 500 shares. On 500 shares, we have received some excess amount, advance amount. What's the final call amount? 25. Due 10,000 shares, received only 9,000 shares. First call. Final call we received on 500 shares in advance. Is it clear, students? Yes, sir. This is the problem. Here there is an implied concept. What is that? Calls in arrears, calls in advance. But to calculate calls in arrears, calls in advance, we should get the date of receipt. Date of receipt of amount on these 1,000 shares. Date of receipt of 1,000 shares. If nothing is given, ignore. Nothing is given about interest, na, ignore. If all the details or all the dates are given, then consider the concept. Give journal entries in the books of the company to record these share capital transactions. Share capital transactions already you know, bank receipt of first call, after that application money transferred to share capital account, allotment amount due, receipt of allotment amount, after that receipt of first call. Means first call amount due. Now receipt of first call, look at this is very important entry here. On how many shares actually we have to receive? 10,000 shares. But On 1000 shares, I repeat, on 1000 shares, we have not received amount now. 1000 into 25. Sorry, 20. 1000 into 20. How much? 20 rupees. Sorry, 20,000 rupees. Means on 9,000 shares, we are receiving 20 rupees. How much? 1 lakh 80. Plus, on 500 shares, we are receiving advance amount 500 into 25. 12,500. 180 plus 12,500, 1,92,500. To share first call, we know 2 lakhs and calls in advance 12,500. Debit is always equal to credit. Check it. Before completion of the entry, check the debit is equal to credit. This is important entry in this problem. Okay. And here, okay, capital. That's it. They did not mention whether the final call amount, final call on what date the amount is called. That's why here interest calculation ignored, interest on calls in arrears ignored, interest on calls in advance ignored. If the problem tells calculate interest on calls in arrears and advance, we have to compulsorily write it. Is it clear, students? This is calls in advance and calls in arrears. Next we discuss the most important concept in issue of shares is oversubscription. Oversubscription. How to just a minute. Before discussion of oversubscription, let me complete a small concept, that is issue of shares for other than cash. Issue of shares for other than cash. Issue of shares for other than cash means company is issuing shares, but in return they are not receiving any cash. But in the place of cash, the company may receive some asset. The company may receive some asset. The company may issue shares for other than cash. Either it may be issued for vendors. Company purchased asset and the shares are issued to the vendor, or company may issue shares to the promoters or directors. In that case, we treat it as goodwill. Our company or know-how. Our company may also issue shares by receiving some technical know-how from their employees or somebody. So in that case, we use the word know-how. Clear? So issue of shares for other than cash. But most of the problems we get issue of shares for cash. Right? So in this case, what is the entry we record? First, whatever the asset you purchased, asset account debit to share capital account. Sorry, asset account debit to vendor account. Generally, we have to record the entry like this. Combined entry. Asset account debit. We received asset to share capital. Generally, when we issue shares for cash, then what is the entry we record? Bank account debit to share capital. Bank account debit to share capital account. But here we are not receiving any cash. We are receiving asset. So asset account debit to share capital. But this entry we should not write straight away. This is recorded in two entries. First, record the entry for recording purchase of asset. Asset to vendor. Asset account debit to vendor account. After that, we issue shares to the vendor. So vendor account debit to share capital account to securities premium account if the shares are issued at premium. Now the concept comes, how many number of shares we issue? How many number of shares we issue? It's a very, very important concept. The same concept will help you in debentures concept also. How many number of shares we issue now? That question comes. Simple. How much amount is payable to the vendor? Take it in the numerator. How many number of shares issue? Amount due divided by issue price of share. Issue price of shares. Sir, issue price of shares means the shares may be issued either at par or at premium. Either at par or at premium. Yes, sir. Fine. Next step. Asset purchased 10 lakhs. Issue of shares. Let us say, for example, 10 rupees face value. 12.5 rupees. Next situation. B. A and B. Number of shares to be issued 10 lakhs divided by 10. Amount due 10 lakhs. Issue price 10. So in this case, how many number of shares we issue? 1 lakh. Entry. Simple. Vendor account debit 10 lakhs to share capital 10 lakh. Over. How many number of shares we issue? 1 lakh. Now, suppose if the shares are issued at premium, in that case, the number of shares issued reduces automatically. How, sir? Actually, amount due is 10 lakh, but the share which we have given is worth of 12.5. Denominator increased. So how many number of shares we issue? 80,000. Who is benefited in B? Under B category, B section, the company will get benefit because company is just issuing 80,000 shares. In A, no benefit to either party. Clear, everybody? Yes, sir. So for this, what is the entry we record? Vendor account debit 10 lakh, share capital 80,000 shares, 10 lakh, 80,000 shares into 10 rupees. 8 lakh. Securities premium 2 lakh. Over. So this is the concept of issue of shares rather than cash. Simple concept. Next we come to another important concept, that is oversubscription. So when we get a problem on this oversubscription, student compulsorily feel little bit difficulty. Do remember the difficulty is only while using the application money. Oversubscription means oversubscription means oversubscription means when we receive oversubscription means uh, number of shares issued or less than the number of shares subscribed. Yes or no? Number of shares issued 50 lakh, but public subscribed for 60 lakh shares. Oversubscription. In this case, public will pay application money on 50 lakh shares or 60 lakh shares. 60 lakh shares. But company will allot only 50 lakh shares. In this scenario, company is having excess amount of 10 lakh shares. Excess amount on 10 lakh shares. Now, how the company is dealing with this excess money? First, just a minute. What the company will do? First option the company has, reject excess application. Reject excess application. First 50 lakh applications they will consider. Next 10 lakh applications they will reject. This is very simple concept. This is very simple concept. Means what? Excess amount 10 lakhs into application money is refunded over. But this is not the case. Second one, pro rata allotment. Pro rata allotment. This is very important, student. Pro rata allotment. Pro rata allotment. Observe carefully. Pro rata allotment. Sir, what is the meaning of pro rata allotment? Pro rata allotment is nothing but, sir, public subscribed for how many shares, sir? Sir, public applied for 50 lakh shares. Public applied for 50 lakh shares, but public subscribed for 60 lakh shares, sir. 60 lakh shares. So here the company will take one ratio. One ratio company will take. What is that ratio, sir? 5:6. 5:6. Sir, what is the meaning of 5:6, sir? Company will allot 5 shares for every 6 shares applied. I repeat, company will allot 5 shares for every 6 shares applied. Suppose Mr. A applied for Mr. A applied for 10,000 shares. Okay, 12,000 shares. For his calculation, 12,000 shares. How many shares he applied? 12,000 shares. Then how many shares company will allot? Allotment. Simple. He applied for 12,000 shares. See, 5 shares applied. Or when I apply for 6 shares, company is allotting only 5 shares. That is a ratio pro rata allotment. But here I have applied for how many shares? 12,000. So how many shares the company will allot? 12,000 into 5/6. That comes to 10,000 shares. Here I have applied for 12,000 shares, but company allotted only 10,000 shares. I paid amount on 12,000 shares, but whereas company allotted me only 10,000 shares, means company has to refund the amount on 2,000 shares. Yes or no? Is this logic clear? I have applied for 12,000 shares, but company allotted 10,000 based on pro rata ratio. Means I have paid some 2,000 shares extra money to the company. 2,000 shares extra money to the company. Company has to refund it, but company will not refund this amount. Sir, why, sir? Because you have paid only application. Na? Further calls you have to pay. Yes, sir. Whatever the excess money now the company is having, that excess application money is adjusted against the future calls. Means allotment, first call or final call. Till we have some excess application money, then the company will refund it. Logic clear? So this is the situation of calls in advance. Simply to put it simple, this excess application nothing but calls in advance. Logic simple, students? Yes, sir. Sir, this pro rata allotment is very, very important. Tell me, in case of pro rata allotment, what happens? Company will first calculate some ratio. This calculation of ratio is very simple. Numerator take number of shares issued, denominator take number of shares applied. Denominator always the number is high. What's the meaning of this 5 is to 6? Company will allot 5 shares for every 6 shares applied. Here A applied for 12,000 shares. The company will allot only 10,000 shares. Means the company is having excess 2,000 shares money. How the company will deal with this 2,000 shares money? It will adjust this amount against future calls. Future calls nothing but allotment, first call, final call, or whatever it may be. Is this clear, students? Yes. So whenever you get a problem on oversubscription, this time we can expect a problem on oversubscription. This time we can expect a problem on oversubscription. Be careful, students. So in this situation, prepare a table. Prepare a table. Prepare a table. Which type of table, sir? Here I have given one table. Please follow this. You observe the material. Just a minute. Yeah, pro rata allotment here. Okay. Okay, I will explain the table along with the problem. No issues. Okay, here is not there, but look at, we'll try to discuss one problem. Along with that problem, I will explain that table. If you can understand that table now, problem is completed. Oversubscription problem is completed. Yes. Look at, this is a comprehensive problem. Illustration 7 is the comprehensive problem. Yes. Tell me, how can I help? If you have any doubt, please post a comment and I will try to reply. At the rate gaming is first 842. Please post your doubt, then I will try to reply. Okay, and I think this is taking some length because this first chapter is only important chapter. Please have some patience. Okay, now look at, this is the comprehensive problem. Once we discuss this problem now, so oversubscription concept completed, means issue of shares concept completed. Next come to forfeiture and reissue. Right, now look at, JHP Limited is a company with an authorized share capital of 10 lakh in equity shares of 10 each, of which, okay, can you tell me the number of shares? 10 lakhs is the authorized share capital, 10 each. Okay, just a minute. This is not 10 lakhs capital. Authorized share capital of 10 lakhs in equity shares of rupees 10 each. 10 lakhs in equity shares. 10 lakhs in equity shares of rupees 10 each. Don't calculate 10 lakhs divided by 10. Then you get a 1 lakh. Okay, it's a 10 lakhs number, of which 6 lakh shares had been issued and fully paid on 30th June 2021. Means already the company issued 6 lakh shares. I repeat, already the company is issued 6 lakh shares. Means how many remaining number of shares left? 4 lakh shares. Unissued share capital. We call it as unissued share capital. The company proposed to make a further issue of 1 lakh of these 10 shares at a price of 14 each. See, total company is having 10 lakh shares. Out of that, already 6 lakh shares issued. Remaining shares left 4 lakhs. Company is not planning to issue total 4 lakh share. Company is planning to issue 1 lakh shares. This is the concept now. No confusion. Tell me, how many number of shares company is going to issue? 1 lakh shares. 10 lakh shares authorized. 6 lakhs already issued, subscribed, paid up. 6 lakhs is completely paid up. Now the company is further issuing 1 lakh shares. 1 lakh shares. What is the face value? Tell me. 10. Very, very important, students. What is the face value? 10. But issue price is 14. Means shares issued at premium. Shares issued at premium. Now check in which installment we are receiving the premium amount. In which installment we receive the amount. This premium amount we have to check. The arrangements for payment being 2 per share payable on application to be received by 1st July 2021. Allotment to be made on 10th July 2021. When dates are given, be careful, 1st July and 10th July. Next, and a further 5 rupees shall be 5 per share, including the premium to be payable, 2 rupees and 5 rupees. Total 7. Remaining amount 7 rupees. The final call for the balance. How much is the balance amount? 7. To be made and the money received by 20th April 2022. Is it clear? Yes. So installments. 2 rupees application, 5 rupees allotment. This 5 rupees includes what? Capital plus premium. Out of this 5 rupees, can you tell me what is the capital premium portion? First tell me 4 rupees. Then capital portion is only 1. Capital amount credit to share capital. Premium amount credit to securities premium. Okay, sir. Next, applications were received for 3,55,000 shares and were dealt with as follows. Observe carefully. Issued shares issued only for 1 lakh. But whereas we have received applications for 3,55,000 shares. Excess applications received for 2,55,000 shares. Excess applications. Now this is called oversubscription. Now look at how the company is going to deal this situation. Observe carefully. Applicants for 5,000 shares received allotment in full. Means, tell me, 3,55,000 shares. Now the company is going to, you can roughly prepare these flowcharts. Category 1, 5,000 applied, 5,000. Category 2, the company is dividing all the applications into 3 categories. This is very important problem, students. That's why I am discussing in depth. Look at first category, applied 3,000. Next, applicants for 30,000 shares received an allotment of applied 5,000, allotment also 5,000. Any excess? No. Applied 5,000, allotted 5,000. Can you tell me the ratio here? 1:1 means 1 share applied, 1 share allotted. Over. Next one, applied 30,000. Applied 30,000. But allotment of 1 share for every 2 applied for. For every 2 applied for. No money was returned to these applicants. The surplus on application being used to reduce the amount due on allotment. Look at. Observe carefully. 1:2. 1:2 ratio. 1 share allotted for every 2 shares applied. Means how many shares allotted? 15,000. And what about the remaining shares? Excess. Excess. Do remember excess. Very important. Now the balance applications, can you tell me? 3,55,000 minus 30 plus 5, 35. Next we have 3,20,000. 3,20,000 balance shares. Clear, students? Yes, sir. Next, applicants for 3. Okay. Here look at, we have excess application money on 15,000 shares now. 15,000 into what is the application money? 2. Means how much amount we have? 30,000 rupees we have excess amount. How we are going to deal with this 30,000 rupees? Tell me. This 30,000 we adjust against allotment. Over. Next, 3,20,000 remaining applications. What is the pro rata? Look at here. Applicants for 3,20,000 shares received an allotment of 1 share for every 4 shares applied. 1 share for every 4 applied. Means what is the ratio? 1:4. 1 allotted for every 4 applied. 1:4. Means 320 divided by 4. We get 80,000 shares. Excess applications we have, excess application money we have on this 2,40,000 shares. into 2 rupees. How much amount we get? 4,80,000 rupees. This is the excess amount we are having. Excess amount we are having. To get total applied 355, but allotment made only to the extent of 1 lakh. What are the remaining excess applications? 2,55,000. 2,55. 15 plus 240. 255. Over. If you can draw this flowchart now, problem completed. Every time these people will pay full amount. Allotment, application, allotment, first call, final call. Second category, they will not pay the full amount. They will, see, excess amount we have 30,000 now, that is adjusted. Next, third category, observe, excess application money we have 4,80,000. This is adjusted against allotment. Even after adjustment of allotment, if excess amount is there, adjust for call money. Even after adjustment of call money, excess amount we have, adjust against future call. After that also we have some excess money, refund. Sequence of steps. Observe how they are going to deal this. The money due on allotment was retained by the company, the excess being returned to the applicants. Very important. Whatever the amount required for allotment, that we are keeping, remaining amount we are refunding. Means, can you tell me allotment amount due? Allotment amount due. Sir, these people should pay 80,000 into 5. How much amount they have to pay? 4 lakh. Allotment amount due how much? 80,000 into 5, 4 lakh. But we have excess application money 480 na? Yes sir. 80,000 we return. 4 lakh 80, we adjust 4 lakhs, 80,000 rupees we return. That's the point. And from these people, can you tell me what is the amount due? 15,000 into 5, 75. What is the amount due? 15,000 into 5, 75. Out of 75, we adjust 30. Remaining amount payable by them, 45. And first category, na, they have to pay amount 5,000 into 5, 25. 5,000 into 5, 25. They will pay total amount. Tell me, 30,000 is adjusted. They will pay remaining 45. Here we adjust 4 lakh 80. So excess amount we have 80,000 shares. This amount is refunded. Very important. And these people, for adjustment of this, we don't have any amount, 0. So that they will pay total 28. So why you are writing, sir? See, this is important for recording entry for allotment amount received. At the time of allotment, what's the total amount receivable? This much, 5 lakhs. Simple. 1 lakh into 5. 5 lakhs we have to receive. But how much amount we receive? Only 25 plus 45. 70,000 we receive. Why, sir? Because already here 4 lakhs and 30,000. 4 lakh 30,000 adjusted. 4 lakh 30,000 adjusted. Over. Very important. Problem completed. Same information they are presenting in a tabular format. Okay, tabular format. If you can understand this table, problem is completed. Or else you can draw the flowchart like this also. This is for your understanding purpose. This is for working note purpose. This working note is very, very important. Calculation for adjustment and refund. Okay. First category, 3 categories we know. Number of shares applied first they have written. 5,000, 30, 3 lakh 20. Total column also write down. This is applied. Allotment already we have calculated. Or first you can prepare this flowchart, and this flowchart can be converted into notes. Okay. 5,000, 1:1 and 1:4, 1 lakh. Amount received on application. Amount received on application means number of shares applied into application money. Okay. 5,000 so here you can write 3 is equal to 1 into already here they have written 3 is equal to number of shares applied into 2 rupees application money, right? So 10,000, 60,000, 6 lakh 40. Total application money received 710. We record entry for 710. Next, amount required on application. Actually, how much amount required on application? 1 lakh shares into 2 rupees. We receive only 2 lakhs now. Is how much excess application money received? 5 lakh 10. 5 lakh 10. What we are doing with this 5 lakh 10? We are adjusting against allotment amount. Okay. Amount adjusted on allotment. How much amount we are adjusting? Tell me. 4 lakh 30,000. And remaining 80,000 we are refunding now. How we are refunding? Here I have given. Minus amount here we got 80,000 refund. The same information they are presenting. Refund amount 80,000. Please observe this format. Understand. Next, amount due on allotment. How much amount due on allotment? Tell me. 25, 75, 4 lakh. 5 lakhs is the due. 5 lakhs is the due. But how much amount we receive? Tell me. First category we receive 25. Second category we receive 30. Third category we will not receive. Why? Because still we are having 80,000 excess money. That's why we don't receive. Means we receive only 70. Same flowchart. You can understand. If you understand this flowchart, now problem is completed. Over. Understood this table? If you can prepare this table, over subscription problem completed. Now look at. The money due on final call was received on the due date. Means all monies are received. You are required to record these transactions including cash items. Sir, what is the meaning of including cash items? Generally, cash items we have to record in cash book. Non-cash items we have to record in journal proper. That's why, but here they are asking including cash item, you record journal entries. Means you need not to prepare any cash book. Okay. In the journal of JHP Limited. Will you write the entries? Yes, sir. Observe this problem. This is very, very important problem. Next, I am jumping into ninth problem. Actually, I would like to discuss, but due to time constraint, I am not discussing. Next, I will go to calls in arrears. Calls in arrears. Sorry. This is forfeiture of shares. Forfeiture of shares. Very, very important. Forfeiture of shares. Very important. Now look at forfeiture of shares. So, what is the meaning of forfeiture of shares? See, I am a shareholder of a company. Company has called to pay me 10 rupees in 4 installments, whatever it may be, but I paid 3 installments, but I have not paid last installment. Company made a call, but I have not made. Company waited for 1 year, 2 years, 3 years. Now you people tell me what company will do. I am a shareholder. Company called 10 rupees, but I paid only 8 rupees. I failed to pay 2 rupees amount. I failed to pay. Company made a call of 10 rupees. I paid only 8. Failed to pay. Failed to pay. Remaining 2 rupees. Company waited for 1 year, 2 years. Company sent so many notices for me. And do remember, company sent so many notices for me to pay this 2 rupees. But I did not respond. Now, what company will do? Company will try to cancel the shares which were issued to me earlier. I repeat, now the company has an option. First, not option, company can forfeit the shares which were issued earlier to me. Forfeiture nothing but cancellation of shares which were earlier issued to the shareholder. Forfeiture of share. Suppose I am holding 1000 shares. What company will do? Company will cancel these 1000 shares. I repeat, company will cancel these 1000 shares. Company is cancelling 1000 shares means company is reducing its share capital with 1000 shares. I repeat, company is cancelling 1000 shares means, I repeat, company is cancelling 1000 shares means in the future means at the time of liquidation, company need not to pay amount on this 1000 shares. Why? Company is cancelling these 1000 shares now. But earlier I recorded entry for this capital entry on this 1000 shares. Now I am cancelling these shares means I have to reverse the entry which I have recorded earlier. What's the entry I have recorded? Bank account debit to share capital. But I have called 10 rupees. Share capital called 10 but received only 8. 2 rupees is calls in arrears. Now I reverse the entry. Earlier I have recorded share capital 10. Reverse. 10 rupees reverse. Share capital account debit 10 rupees. Reverse. To bank. Sir, bank earlier debit, sir. Now I credit bank 8 rupees, sir. Then who is the beneficiary here? Shareholder. Shareholder paid 8. Shareholder got 8 rupees. Then what's the benefit for the company? That's why company will never refund the amount paid by the shareholder 8 rupees. No, this 8 rupee becomes profit for the company, benefit for the company. Because company need not to pay na, because company is cancelling the shares na, and this 2 rupees is calls in arrears earlier debit. Now company will credit it over. Entry share capital account debit, share capital account debit. Look at share capital account debit. Very simple, but most of the students will get confusion. Company called, I am using the word called. How much amount company called? Sir, company called 10 rupees, sir. Company called 10 rupees, sir. Yes. Earlier, what is the entry recorded? Bank account debit 8. Company received na bank account debit 8. Capital 10. Remaining amount calls in arrears 2. Now, suppose I am writing the reversal entry. First observe. I have received 8 na earlier. Now I am reversing. 2. Calls in arrears earlier debit. Now I am crediting, means cancel 2 rupees. Over. This is the entry actually we have to write. But here, company will not refund the amount to the shareholder. Now, what company will do? Company will credit this amount to a separate account called share forfeiture account. A separate account called share forfeiture account. Very important. Share forfeiture account. Simple logic. Observe carefully. See, if you are listening these classes well, company accounts, approximately some 4 to 5 hours time. You invest this 4 to 5 hours time, 25 marks. At least you get 20 marks easily. Maximum concepts I am discussing. Now the pending is practicing. Practicing. Dear students, okay, sir. Now look at share capital account debit 10, to bank account 8, to calls in arrears 2, over capital, shares forfeited, cancelled. But here we will never refund the amount paid by the shareholder to him. Actually, the company will refund when at the time of winding up of the company. But during the lifetime of the company is cancelling shares. Company is cancelling shares. Company is cancelling shares. Is it clear, students? Yes, sir. So this 8 rupees paid by the shareholder will not be paid by the company. It's a benefit for the company. This amount we are keeping. This amount we are keeping in a separate account called share forfeiture account. Over. Share forfeiture account. Over. This is the entry for forfeiture. This is the entry for forfeiture. Simple logic. Common sense. Use your common sense. Earlier I have credited share capital account with 10 because I have made a call. Suppose I have made a call for 8. You also credit 8. Sorry, debit 8. So here we have to take the amount called up. Amount called up means I have earlier credited share capital account. Called up means I have earlier credited share capital account. Now I am debiting the same. So in the problem you have to check what is the called up amount. What is the called up amount? Is it clear, students? So 10 rupees is the called up amount. 8 rupees is the paid up amount. Paid up. Called up, paid up. Remaining amount is nothing but what? Not paid or unpaid. Unpaid is 2. Over. This is forfeiture. Any doubt in this entry? Forfeiture. Simple. Very simple, student. So in the problem what you have to check? How many number of shares I am going to forfeit? Check it. Not all shares, na. Only the default shareholder. Identify who is the black sheep. To put it simple, black sheep. Identify the default shareholder. Sir, 100 shares I am going to forfeit, sir. 100 shares into what is the called up amount till the date of forfeiture? Sir, 10 rupees, sir. 10 rupees means fully called up. Fully called up. Here terminology is important. Fully called up. So 100 into 10,000. 100 into 10,000. 2. Share forfeiture. How much amount he paid per share? Sir, per share he paid 8 rupees, sir. 8 rupees means 100 shares into 8. It comes to 800 na. No need to by heart, just common sense. Common sense. Calls in arrears. Calls in arrears means per share how much pay, how much not paid. Here always per share, per share, per share, per share. 2 rupees per share, sir. 2 rupees per share. How many shares forfeited? 100, sir. Means how much? 200. Over. Now, important point. Important point. Look at, if securities premium not received on the forfeited shares, then securities premium account is debited with the amount due on forfeited shares. Very important. Do remember this. And this point comes only when the shares are issued at a premium. Only when the shares are issued at premium. When the shares are issued at premium, tell me what we do. Securities premium we credit na. First we record due entry. Securities premium account is credited. Due entry. Securities premium account is credited. Due entry. But now we have not received securities premium. So reverse that securities premium account. Over. Reverse that securities premium account. Okay. Next point. If securities premium is received already, then don't touch that account balance. Means what, sir? I am going to forfeit these shares. Yes. On these shares earlier issued at premium. Means I have already received premium, sir. Okay. The premium is already transferred to which account? Securities premium account, sir. Don't touch that account. Leave it. Forget about that securities premium now. If you can understand these 2 points, forfeiture completed. First point, I am going to forfeit the shares. These shares earlier issued at premium. Yes, sir. Check whether premium amount is received or not. Premium amount is received or not. Yes, sir. Premium amount received, sir. Forget about that premium now. Now, the total entry contains only capital portion. The total entry, forfeiture entry contains only capital portion. Yes, sir. If premium amount is not received, sir, then earlier securities premium credited, now debit. Now debit. Over. Means in that case, this entry contains premium amount plus capital amount. Logic simple. Simple logic. Okay. Over. This is forfeiture. This is forfeiture. Next. Look at forfeiture. Look at. Okay. To record the entry for forfeiture, what are the important information? How many shares previously allotted to the default shareholder? Number of shares. Next, what is the face value per share? Called up amount. How much amount already paid by the default shareholder? Next, how much amount not paid? How much amount not paid? How can we calculate? Fifth step is equal to 3 minus 4. Over. Journal entry. Here we know journal entry very well. Observe carefully. Over. After this, we discuss the concept of reissue of shares. Very important concept. Forfeiture, reissue. Very important. Right. Now look at reissue of shares. Reissue of shares means first I have issued shares to the public through prospectus. This time I am reissuing the already issued shares. I am reissuing. First time I have issued to the public through stock exchange. But this time I am reissuing. Reissue is nothing but forfeited shares are issued. This is not through public issue. This may be through auction, or these shares may be issued to a specific group of people or to a specific person by the board of directors. So this is called reissue of shares. Reissue of shares is different from issue of shares. Is it clear, students? Yes, sir. Reissue of shares means whatever the shares forfeited, now we are going to reissue. Observe carefully. Reissue of shares. So company may reissue shares either at par or at premium or at a discount. Sir, actually we have section 53 na sir. Section 53 says no company issue shares at a discount na sir. No company issue shares. More 10 minutes or 15 minutes we take. Once we complete this forfeiture and reissue na, then we stop our discussion. Tomorrow I will try to complete the remaining concept. Actually today I thought to complete bonus right shares also, but this has taken little bit of time. But most probably we get a problem on this concept, 15 marks. That's why I'm taking this much of time. Please have some patience. Okay, right. Reissue of shares. Company may reissue shares either at par or at premium or at a discount. So section 53 says no company issue shares at a discount except in case of employee stock option. Yes, that is correct. But this is not issue. This is the concept of reissue. This is the concept of reissue. So when the company is reissuing shares, company may reissue shares at a discount. But the important restriction is, what is the maximum limit for discount? What is the maximum limit for discount, sir? The discount amount should not exceed, I repeat, the discount amount should not exceed the balance in the share forfeiture account. I repeat, the discount amount should not exceed the balance in the share forfeiture account. The share forfeiture account, yes. See, discount means loss. Discount means loss. I have to debit this discount to the P&L account. Actually, this is not my revenue loss. This is my capital loss. I'm issuing shares. So there itself I am getting a loss. That's why the company restricted the discount amount only to the extent of share forfeiture. Means at the time of reissue of shares, if you issue shares at a discount, means you get a loss na? Yes sir. That loss we set off against this share forfeiture account balance. That loss we should never debit to P&L account. That loss we directly set off against the share forfeiture account. Whatever the amount in the share forfeiture account, whatever the account balance, observe 800 rupees. This amount, how we got, this is the amount forfeited from the shareholder. Now, we are reissuing shares. In the process of reissuing, we have a loss. This loss you set off against share forfeiture account, but don't transfer to P&L account. So that's why the maximum discount on reissue should not exceed this share forfeiture account balance. Is it clear, students? Yes, sir. Now tell me. So shares issued at par. When the shares issued at par, na, company will not get any benefit, any loss. But when shares are reissued at premium, na, company will get a benefit. When shares are reissued at a discount, na, company will get a loss. That loss we set off against share forfeited account balance. Is it clear, students? Yes, sir. Look at for issue of shares forfeited. Company issued shares at par. Then what is the entry we record? Company receives money, bank account debit, equity share capital credit, over. Company is reissuing shares at premium. Yes, sir. Bank account debit 10 plus 2, 12 rupees premium. Out of this capital 10, premium to premium transfer to credit. Securities premium. The company is issuing face value 10, sir, but issue price is 5, sir. Means there is a 5 rupees loss. Check the forfeited account, share forfeited account balance. Yes, sir. 5 rupees we can give discount, sir. Yes. So in that case, how much amount you are receiving? 5. Whereas share capital is how much? 10. Loss is 5. Don't transfer to P&L. Adjust against share forfeiture. Earlier share forfeiture credit, now debit. Over. Over. That's it. In all the 3 situations, if you observe, share capital account is credited with how much amount? 10 rupees. This is the basic concept. Same concept may be changed in different scenarios. Is it clear, students? Yes, sir. After reissue of shares, there is one important concept, that is calculation of profit or loss on reissue of shares. Calculation of profit or loss on reissue of shares. Nothing but simple. Look at. Here, I have shares forfeited account balance na 800. Yes, sir. Now these shares are reissued na. Yes, sir. At the time of reissue, do you have any loss? First scenario, no, sir. In that case, the total 800 becomes profit for you. Yes, sir. Then transfer this total amount to capital reserve. I repeat, transfer the amount from this account. I repeat, transfer the amount from this account. Transfer the amount from this account to another account. We are transferring the amount from this account to another account. That's it. So share forfeiture credit, transferring debit. So share forfeiture account debit to capital reserve account. Over. Common sense. That's it. Earlier I have 800 rupees. Yes, forfeiture account balance. These shares are reissued. During the time of reissue, do you have any loss? No, sir. Then total amount becomes profit. Yes, sir. Transfer to capital reserve. Second scenario. Shares issued at premium. Yes. Any loss? No, sir. Transfer. Total amount transfer to capital reserve. Third scenario. At the time of transfer, any profit or loss? Sir, loss, sir. How much loss? 8. Forfeited amount how much? 8 per share, sir. Loss how much? Per share 5, sir. Always do calculate per share. Profit per share how much? 3, sir. How many shares reissued? 100 reissued, sir. Sometimes na total shares forfeited may not be reissued. This is very important. In this scenario, in our example, 100 shares forfeited. Our assumption, 100 shares reissued. In that case, what's the profit per share? 8 rupees forfeiture profit, 5 rupees loss, set off, remaining profit 3. 3 into 100, 300 rupees is our profit now. Transfer to capital reserve. Entry, share forfeiture to capital reserve 300. Suppose out of 100 shares, I have reissued only 50 shares. Remaining shares pending 50. In this case, how can I calculate profit? Very, very important. Look at, first calculate profit per share. Always calculate profit per share. How, sir? Share forfeited 8 per share. Loss 5. Profit 3. How many shares reissued? 50. How many shares reissued? 50. 50 into 3, 150. In this scenario, transfer 150 rupees. Over. Suppose no loss, sir. 8 rupees forfeiture, sir. Loss 0, sir. Then profit is how much? 8. How many shares reissued? 50. 50 into 8. Suppose all shares are reissued, sir. 100. 100 into 8. Over. This is the concept of reissue of shares. Forfeiture and reissue. Try to solve some problems. Due to time constraint, I am unable to solve the problems on forfeiture and reissue. Basically, forfeiture may happen at any stage. Means after application, after allotment, the shares may be forfeited at any time. Shares applied, after that allotted. Next is first call. Between this gap now, allotment and first call, the company may forfeit the shares. There is a situation. Or application, allotment, first call. Now there is final call. Between this first call and final call now, the company may cancel the shares. There is a possibility. But the entry is same. What you have to check? Till the date of cancellation or forfeiture, till the date of forfeiture, what is the called up amount you check. That's it. Reissue, what is the care you have to take? Whether all shares are reissued, all the forfeited shares are reissued or not. If all the forfeited shares are reissued, then calculation of profit is easy. If only part of the shares are reissued, then how do we calculate? Tell me. First, forfeited amount you take 8 per share. Per share you take first 8 minus any loss. Yes, sir. Loss 5 set off. Then how much profit? 3. This never be. It may be either 0, but it should never be negative amount. Into number of shares reissued only you take, sir. So 150 rupees transfer to capital reserve. That's it. Issue, forfeiture, reissue. This is the concept. Now some problems contain balance sheet. Sir, how can we understand this balance sheet, sir? Very simple. Actually, this is the total format of balance sheet. You need not to remember this total format of balance sheet. The total format of balance sheet you have to remember in CA Inter. But in CA Foundation level, you need not to remember this total balance sheet. What are the important things, sir? First, heading you have to write. Heading not avoidable. Form of balance sheet. Compulsorily you have to write. Name of the company, balance sheet, as it. After that, format you draw. Particulars, notes number. This is current year amounts and this is previous year amounts. After that, observe carefully. These things you have to remember. Equity and liabilities. Below that, shareholders funds, write down. Share capital, write down. Reserves and surplus, write down. This you need not to remember, don't write. This you need not to remember, don't write. Okay. Third one also no need. Fourth one also no need. Okay, don't total the amounts. Till here you just remember. After that, assets side observe. First, non-current assets. Whenever you purchase any property, plant and equipment, then only you remember this. Otherwise, you need not write non-current assets also. Straight away go to current assets. Current assets also, the important amount heading is cash and cash equivalents. Cash and cash equivalents. Here we write how much cash. Sir, how to write the cash balance, sir? Look at the journal entries. I did total the bank account. Bank account debit, bank account credit. Identify the difference amount. Bank account debit 10 lakhs. Bank account credit 1 lakh. Difference amount 9 lakhs. 9 lakhs is the cash balance. So no credits are only debit. Add all the debits. Cash balance. Share capital. That's it. Reserves and surplus. Reserves and surplus. Securities premium comes under reserves and surplus. Do remember. Share capital. Share capital you have to write a note point. I mean notes to accounts. Notes to accounts. In the problems you can observe notes to accounts. I will show you the problem on balance sheet. After that we can wind up the class. Yeah. This is the notes to accounts. Notes to accounts. Observe. Share capital. Don't forget, for equity share capital you have to write separate, and for preferred share capital you have to write separate. First, equity share capital. First, write down authorized. If you have any authorized share capital, write down. Otherwise, ignore. Issued share capital. If authorized share capital is not given, sir, forget about authorized share capital. Start from issued. Issued, subscribed, called up, paid up. Total you can write down. Issued. Sir, authorized 10 lakh. Issued 60,000. Subscribed 60. Called up 60. Less. Calls unpaid. Calls unpaid, nothing but calls in arrears. If any calls in arrears are there, less. Calls in arrears. If any calls in advance is there, calls in advance, then what is the accounting treatment for calls in advance, sir? Calls in advance, show it under other liabilities. Sir, any share forfeited account balance is there, sir. Share forfeited account balance also you show under share capital. Share forfeited account. After adding all these things, after showing this called up, na, add share forfeited account balance. And do remember, this amount will not show in the balance sheet. This amount also, this amount also. But finally here, whatever the amount we get, this is shown in the balance sheet. That you have to remember. Is it clear, students? So this is the concept of issue, forfeiture and reissue of shares. So actually it has taken so much of time. In the tomorrow we'll inform the time, most probably 10 to 12 or 11 to 1 morning session. Evening session I will try to take early, because next 18th you have exam now, so that most probably tomorrow I will complete this company accounts. Meantime, what you have to do is try to solve the problems on partnership. Partnership marathon already uploaded in our Shrestha channel. You can go and watch it. And remaining chapters like final accounts of sole proprietor, NPO and incomplete records, that is also already uploaded in our channel marathon, while reading and watch the marathon also, and remaining chapters also, BRS, all those things. For everything we have marathon in our YouTube channel. Company accounts we are revising. Along with this, try to solve the problem. If time will not permit, at least have a look on the problem. Have a look on the problem. Why, sir? By looking at question paper, na, you should not get surprised. Where this problem? Is this question paper out of syllabus? No, everything is within syllabus. That's why have a look on each problem. Have a look on each problem. Look. I am not saying try to solve. No, look. Have a look. I reading enough. Is it clear, students? So I hope these 2 or 20 minutes helped you to understand this concept of issue, forfeiture and reissue. Why I have taken this much of time is this is very, very important. Damn sure you get a 15 marks question. 15 marks question. Is it clear? Sometimes now they mix this issue, forfeiture and reissue, bonus, rights and redemption of preferences. Sometimes these 4 concepts may be mixed, or exclusively they may ask a question from this chapter. Clear? So that's it. Good night, everybody. Again we meet tomorrow morning session. The time will be announced once again. Till that time,